Yes, good morning everyone. Welcome to our discussion. In today's session, we will be covering a chapter called Bank Reconciliation Statement. It's called Bank Reconciliation Statement. First headache in this chapter is two things will happen. One, you will start loving the chapter if you understand what I say. Two, you will start hating the chapter if you don't understand what I say. Meaning, you have to register the concepts very, very clearly and in simple words. Don't complicate yourself. I'll try and make it as simple as possible. So, better concentrate for the next 20 minutes. Let us say you had one business, whatever, ABC business. And this business obviously would have made purchases, would have made sales, etc., paid expenses. Correct, na? It would have paid rent, it would have paid salaries, it would have made some investment, it would have invested in fixed deposit. So many things it would have done, depending on the nature of the business. That means this business will have its own books of accounts. This business will have its own books of accounts. How much of cash came in, how much of cash went out, how much of checks came in, how much of checks you have given. All those things would have been kept track of. When I say books of accounts, you are understanding basics. So, outward payments and inward receipts. So, outward payments and inward receipts. Sir, in this, we can have two forms now, sir. Outward payments, one I can make in cash also, I can make through check also, correct? Similarly, inward receipts, I can receive the money in cash also and in check also. Whenever I am telling check, I mean bank. That means banking transactions. Are we clear? Apart from this, you could also do one thing. Whatever cash you have in hand of the business, you can go and deposit into the bank, correct? Cash deposits. You can go physically deposit into your account and now there is also a possibility that some person who is my customer, one of my customer, he took my bank account and he went to his bank and deposited cash in his bank, which was later transferred to my account. Understanding what I am saying? So somewhere he can't physically come and deliver the cash to me. He went, deposited the cash in his bank account. The bank gave a transfer to me. It came and got credited into my account. Till you're okay? Sure. Now the question is, what other cases are we trying to cover? Rather than telling what we will cover, I will tell what we will not cover, then it becomes easy. Language okay? We are not covering cash transactions. Outward cash payment, inward cash receipt is not what I am discussing in this chapter. Are we clear? Yes. Let us see further what could happen. Sir, when you said you are not going to include cash transactions of inward and outward, do you include this? Yes, I include this. Because it physically did not come to me as cash, it was deposited by the customer of mine into his bank account, which was transferred to my bank account. Essentially, it is still a bank transaction. So therefore, I include this. Understanding? And next what happens? I would have made payment I would have made payment to my supplier. I would have made payment to my supplier, let's say by check. Sir, the moment I give check today, immediately in my bank account, State Bank of India, will the money get reduced? Please understand the timing here. The moment I gave check to you, in your bank account, immediately in this moment itself, is it reduced? Is it like Google Pay?
No, sir.
It will take time.
Yes, sir.
What is the time? You have given the check to him. That fellow goes to bank and puts the check into his account, and it will take time for clearance from my account to his account.
Yes, sir.
So it will take 3 days. I am taking an arbitrary example. Outstation checks may take some more days. At least 3 days of delay is there.
Yes, sir.
Everybody agrees.
Yes, sir.
But the fact that I have paid this supplier in my books of accounts, I would have entered it as paid to A. In my books of accounts, I have given a check to A, means I would have recorded the transaction. That means if my books of accounts, let's say, had 1 lakh rupees balance, in my books of accounts, I had 1 lakh rupees of balance. If I have paid to A, let's say 30,000 rupees, in my books of accounts, the balance will be showing 70,000 rupees because I have already issued a check. Sir, whether the same in bank account, State Bank of India, also it is reduced by 30,000? Not yet, no. It will take 3 days of time. Understanding what I am saying? So in my books of accounts, I have already reduced whatever balance I have because I have made a payment. Whereas in bank account of mine, bank account of the business, it is not yet reduced. Following what I am trying to tell, when it will get reduced? When he presents the check and to his account it should get credited and in my account it should get minus. His account it will get added, my account it will get minus. Till here okay? Now similarly another transaction could happen where one of your customer has given the check. One of your customer has given the check to you. Understanding what I am saying? What did you do? 2 things. Immediately went to the bank and deposited. But still it will take 3 days time. But the moment you received a check from one of your customer, you would have recorded the entry in your books of accounts stating that I received from Mr. B. Received from B. Let's say it was 50,000. So cumulatively see the transaction. You had 1 lakh rupees balance in your books of accounts. You gave 30,000 rupees check. So the revised balance came to 70,000. No impact is yet to happen in your bank account because time delay is there. Similarly, you had received a check from one of your customers, 50,000. So your bank balance will be showing 1,20,000 in your books of accounts. Whereas in the bank, the impact is yet to take place because it will take 3 days of time. So, what am I talking about? I am talking about a typical scenario where your books of accounts versus passbook. Your books of accounts versus passbook, you always try to compare. Ideally, both should have both balance, same balance because it is your books of accounts and bank account of yours. Understanding the issue here? If it is not so, if the balance is not the same, why it is not the same is the chapter's essence. We are reconciling the differences. Understanding the basics part?
Yes.
We are reconciling the differences. There are umpteen number of possibilities for differences. What it could be. Let's give some thought out of it and then we will go to the chapter. Sir, that bank idiot fellow, SBI fellow, without me telling, he is put ATM charges. That means in my bank account, which is there in State Bank of India, he is minus in this passbook. Where is that passbook? Passbook. Something like this it will be. He is minus ATM charges. He is minus it. Sir, I will ask you one different question, sir. Will the bank, State Bank of India, call you and tell, listen, I am State Bank of India, can I please go and minus it from your account, ATM charges? Will they call you and ask? It is an auto feature. Software would have been designed in such a way that the charges annually, they would debit it, meaning minus it immediately, which you will not be knowing. Correct or not? When the bank passbook printout is taken, then you will come to know, oh, they are minus ATM charges here. So what I should do? I have not recorded that in my books of accounts. No, my books of accounts is there here. My business is there here. In that business, I have not recorded this ATM charges. So my books of accounts will be showing a different balance. Passbook will be showing a different balance. Till your understanding? Clear? Now one of my customer, without my knowledge, he has deposited money from his bank account to my bank account. He didn't even tell me. Understanding? So what would have happened in the bank? Money would have increased. But I did not know, no. He didn't call me and tell I am depositing money. He is deposited. Then later I pulled out the passbook printout statement. Later I understood, oh, this fellow Mr. A has sent a check to me. Instead of sending a check to me, he is made a RTGS. NEFT. Understanding what I am saying? So therefore, there could be difference in my books of accounts and passbook. Till you're okay? Next. Sir, I had made some investments somewhere, let's say fixed deposit. That bank, obviously when we make fixed deposit, what are we going to get in return? Interest. Correct, huh? Basics. Will that bank fellow call you and tell, listen, your fixed deposit has come up to so much, you are entitled for so much of interest. Can I transfer it to you? Will he ask you? Again, it's an auto debit or auto credit feature. It's a software control issue. So, my passbook would have increased by that much of interest which I did not know. Sir, when will we know? When I pull out my bank statement, that is passbook, if I take a printout, then I will come to know, oh, my balance is higher. But in my books of accounts, I did not know this. Therefore, I should reconcile this. Understanding the areas where reconciliation can come? Yes? So, ultimately, what is the point that we are trying to do? Not adds and minuses, not formats, but conceptually understanding simple issues like this. What is that? What happened in the passbook? What happened in the books of accounts? Understanding? What happened in my passbook? When I pulled out the passbook statement, what happened there? Or what and all has happened there? The same thing should have happened in my books of accounts because it is my account only, right? Understanding the issue? So, the statement is like this. What and all has happened in the passbook should happen in books of accounts. What and all has happened in books of accounts should also happen in passbook. If there is a difference, you have to give the reason. That is called bank reconciliation statement. Understood the basics part? Yes. Sure. Shall we go in detail? The detailed part I will be doing it in the next session.